The Owen James Report is brought to you by
This program is brought to you by the Grace Kennedy Group. We care.
Good evening. This is the Owen James Report. Jamaican conglomerate Grace Kennedy says it's successfully executing its strategy of becoming the #2 food brand in the multi-billion-dollar U.S. ethnic market. That's a key earnings strategy, according to Grace Kennedy's Chief Executive Officer Don Webby at the conglomerate's November 13 investor briefing.
The size of the Hispanic market is $5 billion US dollars. Our strategy, colleagues, listeners, is to break out and become the #2 ethnic brand in a much bigger segment of the market. We're executing well. We're going to be relaunching the Lafayette brand with some really nice, attractive packaging next year. And I'm looking forward to seeing significant growth with the Lafayette brand. What is also very interesting in terms of the Grace brand, which is showing growth, we have been growing significantly in the chains, Winn-Dixie, Publix, Walmart, etc. And this is in the US market. We launched our Grace Jamaican patties, and colleagues, it is moving off the shelves in Walmart and in Target.
Webby described the conglomerate's 9-month financial results as satisfactory.
For the 9 months ended September 30, 2017, the Grace Kennedy results I would describe as satisfactory. We have achieved group revenues of $69.3 billion, an increase of $2.6 billion over the corresponding period of 2016. Net profits for that same period was $3.75 billion, an increase of $51.4 million. It is important to note in those figures, and Mr. James will expand on that, that in both periods we had one-off items, or what we describe as non-recurring gains. For the period of 2016, you recall on our audited accounts, we reported a liquidation gains of $567 million, and in 2017, unaudited, we are reporting a one-off gain of $418.5 million, which is a result of the Consumer Brands Limited acquisition. What is very encouraging for the performance of the Grace Kennedy Group, the third quarter, if you were to look at the third quarter of 2017 versus the third quarter of 2016, our profits are up 56.9%, and that includes the one-off gain. Without the one-off gain, the performance is still satisfactory, in fact good, with an increase of 14.6%. Let me touch on a few segment reports. The food trading division did very well. We grew both in revenue and pre-tax profits. I think what is very encouraging for us is that despite the significant fall-off in the corned beef sales, and we are still at about 40% of where we were the previous year, we are showing growth in revenue. The corned beef factor really affected us in Jamaica and in the Caribbean. What I'll say is that we have put in place the strategic marketing plans to ensure that we recover in terms of corned beef revenue, and we are seeing over the period that we are in fact recovering in terms of corned beef revenue. Also, what we have noticed, and we're very pleased that our other products, the Vienna sausages, which is produced in our factory in Sabla-Mar, has gone up significantly, and our mackerel sales has also gone up significantly. So while we have not replaced in its entirety our corned beef revenue, our other products are doing exceptionally well. A major highlight for us is that the Consumer Brands Limited transaction, which I mentioned earlier, became effective August 31st, 2017, and the transition has gone exceptionally well. Mr. Athol Smith, who was a previous major shareholder and CEO of that company, he has agreed to be our chairman of CBL, and I think Athol will make a big difference in terms of a smooth transition. Let me just speak about the performance. Well, the performance for the first month of CBL and integration has gone very well. In fact, the first month, the revenues are significantly above what we anticipated, and also the profits. And really, the consumer brand is majority Procter & Gamble. But there are other good principles which we have acquired with this company here, including Del Monte Foods, which is a popular brand in the United States, Eastern Caribbean Flour Mills, and there are others that we have acquired.
On the foreign exchange market, both the benchmark American dollar and sterling strengthened against the Jamaican dollar, while the Canadian dollar weakened. Now, the greenback gained 10 Jamaican cents, closing at an average selling rate of $126.74 Jamaican, while sterling jumped by $2.09 Jamaican at an average selling rate of $167.17 Jamaican. However, the Canadian dollar weakened by 30 Jamaican cents to close at an average selling rate of $99.90 Jamaican. News on the market now, and losses by highly capitalized entities such as Cable and Wireless Jamaica, NCB Financial Group, and Caribbean Cement helped to depress the Jamaican stock market indices. The All Jamaican Composite Index fell by over 2,300 points, or 0.7%. 46 stocks traded, with 20 advancing, 18 declining, and 8 holding firm. The winners included Siboney, Caribbean Producers, Grace Kennedy, Jamaica Broilers, Jamaica Stock Exchange, Lasco Financial Services up 10.5%, Paramount Trading, Scotia Group, Sagicor Group Jamaica, Supreme Ventures, and Sagicor's Real Estate X Fund. Now, the losers included Caribbean Cement, Cable and Wireless Jamaica, Derrimont Trading, JMMB Group, Mayberry, NCB Financial Group, Proven Investments, Pulse, Consolidated Bakeries or Purity, Radio Jamaica, and Seprod. That's the Owen James Report. Good evening.
The Owen James Report was brought to you by
This program was brought to you by the Grace Kennedy Group. We care.